session is for informational purposes only. The information represented on this channel will not be relied upon as basis for investment decisions. Before making an investment, making any investment, you should carefully seek any independent legal, tax, and regulatory advice. In particular, you should seek the advice of a licensed, registered financial advisor with regards to sustainability of this investment product. Taking into account your specific investment objectives, financial situation, and any particular need and your ability to assume risk involved. Before you make any commitment to purchase an investment product, this session is only for general evaluation, and any recommendation here made in does not take into account any specific investment objectives, financial situation, or particular needs of any particular person. While we believe the information here is believed to be reliable, it is not independently verified by any one of us. Okay, that should cover it. Let's go.
Okay.
Okay.
I agree.
I
agree with what you said.
I agree, everything. Yeah. Okay, well, welcome everybody. Today we're going to do a special session in which we've invited a lot of popular investors from the Etoro platform to do a focus group and to talk about various aspects of the market. Just as a disclaimer, the thoughts of the popular investors on this focus group are not those of Etoro, and we are not employees of Etoro. So without further ado, we'll get started. And I'll introduce the panel. So we have Amar Singh, Simone, Rizzetto, and Zheng. And I'm going to let everybody individually introduce themselves, say a little bit about them and some of their background before we launch into our key topics. So we'll start with Amar. Do you want to introduce yourself?
Yeah, sure. So I'm Amar Singh, or people call me Amar for short. So I actually worked as a lawyer for many years. Right now I'm transitioning to a full-time investor. I started sharing my portfolio on YouTube about 2 years ago. And at that time, I set a goal for myself to grow my portfolio to about $1 million within a period of about 10 years. And so for about 1.5 years, I was growing my portfolio and sharing my updates on my YouTube channel. And then I discovered Etoro, and then I decided to set up my portfolio on Etoro. So far, I think it's going well, and I'm enjoying the journey on Etoro.
Great, thanks Amar. And if we go over to Simone.
Hello, everybody.
Hello.
So my name is Simone, and I'm from Italy. Now I stay in Singapore. And so my background is in computer science. Initially, I had a master's degree in computer science. And then during my education, I gradually started to be more interested into biological and medical science. And I did a PhD in medical science in Sydney. And from there, I started to doing research into computational biology and bioinformatics. And now I'm working as a researcher in oncology research. That's what I've been doing for the past couple of years. And my story with investments started in 2017. Actually started earlier than that, but I never had enough capitals to invest a large amount of money.
Yep.
But during my PhD, I took some of my savings. There was a technology I was particularly interested in, and I decided that beyond my time and that I was spending to researching that one, I could also put some of my money. And it worked out quite well. And then that's how I started investing. And gradually I started to diversify my portfolio. And in 2019, I joined Etoro. And I've been doing quite well since then. And yeah, that's all for me.
Okay, thank you. Thanks very much, Simone. And as we hop over to Zach, do you want to give a bit of a background to yourself?
Yeah, sure. So I've been on the platform for coming to 5 years now. Next month actually is be my 5th year on Etoro. So yeah, happy Etoro birthday to me. I started my journey quite simply because I was in investment banking at the time. I was working in a bank, I was studying my master's of finance. And then my mom asked me a question like, how do I invest my money? And I looked at my mom with this like puzzled look. I'm like, I have no clue. I've been in the finance industry for like 10 years and I have no idea what to do. So that's actually where this eToro journey started, because I wanted to find out like what's the best way to start investing. And yeah, I've dedicated a good portion of, in fact, most of my life savings into this journey. So I just really want to help other people get through all the fluff and all the unfortunate bullshit in the market. Everyone's trying to sell you a course, everybody's trying to sell you a fund, and it's not fun if you're new, especially. So yeah, that's how I started my journey. And Stephen, what about you?
Great, thanks. So my journey is an interesting one. So just a little bit about myself. So I've been an expatriate, kind of traveling around the world for about 14 years. So I'm originally from the UK, but I've lived in a lot of different countries for work. So previously I worked in both the oil and gas industry and also in healthcare and security for many years. And I've lived, after the UK, I've lived in China, Qatar, Dubai, Saudi Arabia, Malaysia, and now I find myself in Singapore. So I've kind of done a bit of a lap of the world. So it's given me some kind of different perspectives. I've been investing now for a little over 10 years in the stock market. I kind of got into crypto in about 2016 and learned kind of more about those areas within crypto. And I've been on the eToro platform since about 2017, but not really too active at the beginning of the process, just as a personal investor. But in 2020, I took the move to become a popular investor, yeah, so to take on other people's funds and investments. So since the beginning of 2020, I've become a full-time investor. So I'm kind of doing investments full-time now. And I guess in terms of eToro, I kind of have 3 main objectives for eToro. One is obviously to try, which is most important, to try and grow copiers' funds. I think that's kind of what we're all here for. But the second is to provide kind of really good analysis and communication for the eToro copiers and provide them kind of, added benefits. And the third one is education. So I have a YouTube channel which I provide education tutorials on subjects to help new investors learn. And I often share those both on YouTube and on the eToro platform to help the copiers, not only hopefully make money, but also become slightly better investors. I do all I can. Probably not going to happen just from my videos, but if I can help out in any way, I do. So that's a bit of an introduction about me. Great. All right, so as we move on, so I think in terms of the structure of this focus group, I think it's going to be quite relaxed, and we can talk about, what we want. But we thought it was important to have a few themes of discussion areas for this focus group. So we're going to be focusing on the COVID recovery. Obviously, COVID's been a real thorn in everybody's side over the last 15 months. So that's a big story in itself for us to talk about and how we're recovering from that. We're going to look a little bit about interest rates, and we're going to talk about the potential for inflation, not only in the US, but also other areas of the world. And then lastly, I thought we would explore from each investor here, explore what the kind of main themes are for 2021 and what they think is going to do really well, kind of either in their portfolio or areas of investment. So those are the main things. So I wanted to go around the group of investors here and ask them some questions. So Amar, if you want to just explain to us a little bit about how the market's done obviously in 2020 when COVID first appeared, and some areas where you know, we have seen recovery or areas we haven't seen recovery. Can you just give us a bit of an overview on your thoughts of COVID and the markets in general?
Okay, sure. So generally, I don't consider myself a macro investor, so I don't really focus on macro themes that much. I try to focus on the companies I own and I try to understand them very well. But of course, I mean, COVID has had an impact on all companies. So, I mean, when COVID first hit, I guess a lot of us didn't know what to expect. We didn't know how long this was going to last. We didn't know, you know, would the stock market be down for one month, 2 months, or even a few years. But I mean, through my investing years, my general theme has been to buy and hold great companies. And so I didn't want to change that. I mean, whether there was going to be COVID or no COVID. So what I did actually during the period of, I think now it's about 1 year ago exactly, when I think we almost hit the market bottom. What I was doing aggressively, at least for my own portfolio on YouTube, was I was buying a lot of stocks. Because as a buy and hold investor, when you see stock prices drop so much, you feel very happy actually, because you can buy great businesses at you know, bigger price, at better prices.
Yeah. So
I was buying a lot of stocks. I was selling put options, and from those put options, I was getting premiums, and I was buying even more stocks. So last year was actually a very good year, contrary to what the economic indicators would seem to suggest. At least for the stock market, it was a good year, and for my portfolio, it was a good year. But what I'm also seeing is I'm seeing this divergence. Some have called it the K-shaped recovery. Some say it's a V-shaped recovery. But what I've seen is that a lot of companies are doing well. And in fact, they have prospered during COVID, especially those companies that are in the digital, so-called digital economy. And other companies have done not so well. So I think that's given us a lot of pause for thought. It gives us the time to analyze and look at these companies more carefully. Can they thrive in a period, even when COVID subsides? I think if they can do well during COVID, I think they can do even better after COVID subsides. So those are my initial thoughts. Happy to hear from the rest.
Okay. Do we, Zach? Do you have anything you know, you want to say on the COVID situation and the COVID recovery?
Yeah, I mean, I am a macro guy, so I would take the other side of Amir's trade on that. So if we look at the market today, I was just looking at this. The S&P 500 is up like 18% in year 2020. The GDP growth of the US economy was negative 3.5. This is like this huge divergence between what is, you know, reality of the stock market and the reality of the economy. It's not like we haven't seen this before. Let's just be 100% clear. A lot of people are saying it's money printing is going to economy. 100% agree. Yeah. And if you're an economist, you know, the only way for economy to grow is either you increase credit or you increase the amount of productivity in the market. That's the only way to increase GDP. So we've definitely seen a lot more credit go in the market. But does it kind of contribute to this 18% increase? I kind of beg to differ. I don't think this is really sustainable. It is definitely what Robert Shiller would call a rational exuberance. But yeah, I mean, it's interesting to see where we go. I have some thoughts in my upcoming section later, but I think I'll let the rest of the panel kind of chime in from here.
Yeah. Yeah.
So,
What do you think? Yeah.
Yeah, I think it's interesting as well because I think it's very easy just to say kind of COVID as a kind of a blanket statement and that it affected all industries, all geographies the same. I think there was some, fairly large differences. I think that a lot of tech stocks actually performed pretty well last year in 2020. And actually they were a big beneficiary of COVID because a lot of these kind of large online retailers, everybody was getting stuff delivered to their houses. So there was kind of a pocket there of growth, and I think there was an overall macro theme of more and more things getting done online, and it's slowly affecting the growth of retailers. But I think what happened in 2020 was actually things sped up a lot. So we probably moved forward, I don't know, 5 years, 6 years ahead of what we probably would have in a normal market. So I think, yeah, obviously many traditional types of companies really suffered during the lockdowns, but yeah, there were some kind of pockets of hope. But yeah, as we'll probably talk about a bit later, a lot of that was kind of fueled by the artificial stimulus provided by governments to both businesses and to individuals. So I think moving forward, there'll be kind of a fine line between economic stability, kind of getting things kind of back to normal, but without the extra stimulus that's provided, and trying to grow these companies more organically. Overall, I'm pretty bullish moving forward about the economy, and I often hear many people say, I hear many people in the media, and I hear a lot of fund managers saying, the bear market's coming. They say this a lot, but they keep saying it till they're eventually right. But what you notice is there is still a lot of opportunities in the market. Some things will get overpriced, and some things will become, will go over people's expectations and may need to dip, but there are still lots of opportunities in the market, in my opinion. So Simone, do you have any views on COVID?
Yeah.
And
so,
anything you want to say?
Just to follow up from what Zach said about the S&P 500 compared to the GDP. Yeah, you're right. GDP went down while S&P 500 was going skyrocketing. But remember that GDP is the results of many different sectors, including tourism and travels and everything, so manufacturing and so on. While S&P 500 is very heavily overrepresented of tech stocks. So what we have seen is just a rotation into tech-related stocks, which push up the S&P 500, even if there were U.S. economy was actually going down. Now we are seeing the rotations going a little bit on the other side. So from tech stocks going back into other industries. Probably we have seen this rotation happening a couple of times already. One was in December when vaccines were firstly announced by Pfizer. And suddenly there were a lot of people buying airlines and so on. And now recently also with everybody's like thinking about reopening, people starts to go back into the stocks, into travel stocks that were affected during the pandemic. Probably we are going to see a bit more of that. But overall, I think that tech stocks in particular will still keep doing well because pandemic remained long enough to make the things that we had to do to adapt to the lockdowns almost normal. So working from home, now it's after a year, it's almost normal. Buying groceries online, it's also normal. And those things will probably stay, not at the level that they are right now, but I'm expecting that they are gonna remain from now onward.
Yeah.
Yeah.
I think that's a really, really good point, Simone, because we'll probably talk about this a little bit later in terms of the interest rates.
Right.
But I think although kind of the interest rates may affect the growth stocks and the technology stocks in the short term, I think there's a lot of case that we've actually increased our reliance on technology during this COVID-19 period. And, you know, although some things might start to go normal and people still may want to fly and have business meetings and meet with people, etc., I think that we've also learned that we can do a lot of things now that don't need to be done in person at high expenses. So I think we have increased our reliance on technology a lot more during this period. So it could be good long term for tech stocks and growth stocks.
Right. Yes. So if you are a long-term investors, you are fine with the Nasdaq.
Yeah.
You can have rotations on the short term for sure. We have seen one recently, but even so, even now that tech stocks were heavily affected by the inflation rates, by the rotation, still they kept growing. I think Nasdaq is green for the year. So even S&P 500, it's green for the year. So it's not that bad. It's still going, just not as fast as other stocks. The problem, not a problem, but people really wants to jump on the fastest train. And right now, the fastest train could be travel stocks or airlines or tourists, because they have been heavily affected. So they think that people can have a larger return by jumping into this other train.
Yeah.
It could be risky because I believe they had to make a lot of debts in order to survive. So I'm not studying that industry in details. So I don't know what was the impact of pandemics into their finance. It could be that have been worse than what I'm aware. So for that reason, I'm staying a bit away from that kind of investment. It's not really my expertise.
Okay.
But maybe somebody else could say that this is good moments to jump into travel and airlines.
Amir, I'd like to hear your thoughts on that. I mean, you are a value guy, so do you see any value in stocks in some travel stocks right now?
Well, one travel stock that I was invested in is Booking Holdings.
Right.
So I've been invested in Booking Holdings for a number of years, and Booking Holdings owns a number of platforms that allow to book accommodation overseas. So, and in Asia, I think they own Agora. So I've used Agora a few times as well when I traveled to Malaysia. I want to book a hotel or something like that. But I think, like Stephen has said, I think there are a lot of things we're discovering that we can do now through Zoom or through video conferencing. So I don't, even when I think COVID subsides or goes away, which I don't think will happen at least for a few more months or even a year, because I think COVID actually has become quite a political issue. I mean, I think governments will err on the side of caution before deciding they want to reopen their borders. So I foresee borders be staying closed for some time more. I don't see travel stocks rebounding, or at least travel businesses rebounding that quickly. Even if the stocks do well, I don't know about that, but I don't see the business coming back so quickly. So I myself, I'm steering clear away from some of the travel stocks that I used to own. So Booking Holdings, I still own it in my YouTube portfolio, but I don't own it in my Etoro portfolio. So I'm still worried about that trend towards travel stocks. So I think for now I'll stay clear.
Yeah, I think that's a good subject as well, Amar, because I think there's kind of this overall rotation at the moment, as we said, to stocks that were affected with the pandemic. But I think at some stage it can go the other way, where everybody could potentially start piling into not only the travel stocks, but also the leisure stocks. And I think it's important to diversify your portfolio and have a little bit of different sectors, etc. But I think there could become a point where even these recovery stocks start to become a little bit overvalued. And I think you start to see that in a couple of areas. So recently I noticed, and I'm not an investor in any of them, but I noticed that some of the kind of concert related stocks are actually past what they were before COVID. COVID even started, and they haven't held a concert for 15 months. So is that potentially overvalued? Are people piling into that because they're thinking, well, concerts might resume? I think that's just a pocket and a very niche of what we're talking about, but serves as an example.
I agree. I noticed the same. I actually noticed exactly the same things. I think it's like I was watching, I think yesterday or I don't know when, what was TripAdvisor stocks, huh? I think it's above what was January 2019, as you said. It's insane. They had like even airlines had like almost zero revenue, and then they probably made billions of dollars in debts, and they are valued more than what they were used to be before. So maybe this is the effect of the liquidity that was injected into the market from Fed.
Yeah, I agree. I think I think this just shows it's important. Although we need to keep an eye of the main trends that are happening in the market, I think this is a good sign that we need to kind of zoom out and get some perspective sometimes, and kind of think longer term, because these short-term trends are going to come and go. And I think as investors, we need to be able to look at them and say, you know, long term, is this stock good value, and will this sector grow, not just, you know, as part of a theme of rotation. Zach, do you have any thoughts on?
I'll give one closing thought. I think it's just a food for thought, if you like. I was talking to Amir about this the other day on the bus, actually. I was saying that I don't think tech over the next 10 to 20 years is going to be doing well. That's just my opinion. Reason being is very clear. I mean, if you look all the way back since the 1920s, the hottest stock or hottest sector that has been rotated into tends to rotate out. I think we're talking a lot about rotation now, right? So when it was all stocks, all reached an all-time high, and then you know, everybody was piling into oil, but then regulators came in to break them up. Same thing with banks. Regulators came in to break them up. Same thing with Microsoft and all that. They were broken up. Banks, the list goes on, right? So what tends to happen if those who are a bit more academic, there's something called the Pharma French model that says basically value outperforms growth over the long term. So it's just food for thought. I mean, it's just an academic exercise, but I truly believe in it because I think history does rhyme. It doesn't repeat itself, but it does rhyme. And the most dangerous thing we can say, there's a great book on this. If you guys ever have time to read this, it's called This Time is Different, a cautionary tale.
I read that.
It's a really good book. And yeah, I don't think this time is any different. It's just rhyming, you know?
So you're saying we are gonna see another tech bubble exploding?
No, I don't think it's a tech bubble. I think what we will see is I think there'll be a breaking up of big tech. I think blockchain I'm a blockchain guy, right? I mean, that's my full-time job. Blockchain has brought a very interesting point, which is privacy around your data. How do you reward users? I don't know if you guys use this, but there's something called Brave browser, right? So Brave rewards you, gives you cryptocurrency for pushing you ads. That's completely the opposite of what Google is offering you. They get advertisers to push ads to you. and you don't see any value, you just use a free service. Now they're kind of flipping on its head, which is interesting. So I think those are things that we need to watch out for when we talk about Google and AdWords and Facebook and how they push data and how they push different kinds of advertising to you. But yeah, it's just my thought, you know.
Yeah, and do you think as well? I mean, I do believe that technology stocks will continue to grow, but I don't think it will be all encompassing where they take over everything. But I do agree with you on the blockchain part, because I think a lot of these services are going to become decentralized. Yeah. So obviously it will a lot of these services will actually cut out the middleman of the service, and everything will be on the blockchain. So obviously that could affect some of the technology businesses who make money as a trusted third party. So yeah, that could obviously blockchain could really eat into the some of the market cap of technology. But I still think we are moving into a technology-based world, and I think they will do well. But I guess a cautionary tale is how high the valuations can go, because we can all say that tech stocks are great and they're great moving forward, but when is a point where they become totally overvalued? Not a very easy question to answer.
I'll give just one last thought to that. I think you're absolutely right. Blockchain is where it needs to be. But I don't think technology is going out of favor. I think what's going to go out of favor are the really big tech companies. I think I'll make just one last point on this. This case in point is you look at Facebook, they tried to launch Libra. It flew like a lead balloon, right? Yeah. Everybody hated that thing. All the regulators came in and said, no. I mean, there's a reason for that. Are they doing anything new in terms of blockchain technology, like remittance and on a private chain? I mean, the answer is definitely not. It's store of values. It's quite simple. Yeah. But yeah, because it's Facebook, that thing did not fly.
I think the thing is that with that, Zach, is single point of failure, right?
Yeah.
And because Facebook, well, actually Facebook, I think people actually think Facebook, completely launched Libra, but Facebook are actually only one part of Libra. Yeah. But because they're centralized companies, it's very easy for kind of law to kind of crack down on them and say, you shouldn't be able to do this. So
let's get into that in the blockchain portion. I'm looking forward to that.
Yeah, sure.
But okay, as you said, regulation. Yeah, you're talking about regulation, so it's gonna break down companies. But more than breaking down, like in the example of Libra, Facebook was not broken down, was just limited. Its expansion was limited. So exactly, we are gonna see more. I agree that we could see more regulation that will prevent big companies to expand to other markets. So, for instance, if Facebook suddenly wants to become a bank, obviously they're gonna stop it. But if Facebook is gonna keep innovating into social media space, and social media will take larger and larger space into our daily life, then, I don't think that regulators can do much about that. Same with Microsoft or Nvidia. They are gonna boost AI, and then they are gonna sell AI as a service. This doesn't mean that they suddenly gonna make every product that can incorporate AI just by themselves. They will just sell it to their customers, and they will be really good into that one. So I think there is still room for expansion, for growth, maybe not for expansion for this black stock, but I think they can keep growing.
Yeah, I think that's really interesting. Another thing I thought we would talk about, I don't know what the expertise on this is like in this group, but I wanted to talk a little bit about kind of what we've been kind of seeing with either commodities or kind of or to talk about and move towards kind of alternate energy sources. Does anyone have any kind of thoughts on that? Anyone from the group can volunteer.
Outside my area, I am not. I know a bit, but not a lot. So I'm going to pass on that.
Amar, anything?
I'm not really a commodities guy, but what I've seen over the last year is that the demand for copper has skyrocketed.
Yeah.
I think the demand for copper has gone up so much because a lot more electric vehicles will be built. So I think over the next 5 years, I mean, I definitely see some substance to that trend. I think the price of copper, for example, and other metals that are also used in electric vehicle production could go higher. I think in general, I think all vehicles will go electric one day. I think that's a trend that's unstoppable, actually, because it just makes more sense to have electric vehicles. It's better for the planet. It saves you money. It's the mechanics are better as well. So I mean, I'm not a mechanical engineer, so I don't know what kind of metals really are good for electric vehicles. But I heard that copper is very good.
Yeah.
So that's one commodity I'm keeping an eye out on. Another commodity, a so-called commodity I'm keeping an eye out on is Ethereum, actually. I consider it a commodity because I feel that it's something that can be used to power the blockchain network. I'm not a blockchain expert or a developer, but I do really like the concept of decentralization. So, I mean, just to touch on the Facebook example, I mean, Facebook had to ban Donald Trump because, you know, if they didn't ban Donald Trump, then Zuckerberg would get all the blame. But if we had a decentralized social media platform, then no one would get the blame. And, you know, anybody could say whatever they wanted. So there's pros and cons to that. I mean, those who favor freedom of speech would prefer something like that.
Yeah.
But I think decentralization is definitely the way to go. But I'm not sure if all services will go decentralized. Maybe some are more suited to that and some are less suited to that. But those are my initial thoughts. Those are the thoughts I have.
Okay. Thanks, Amar. I think I'll chip in a little bit on the on commodities. I previously, not for a while, but I previously used to work in oil and gas. But I'm actually in the assumption right now that we're going to probably see some type of commodity super cycle. I think for a number of different reasons. So I think obviously during COVID there was a less demand for energy as people were kind of inside their houses and they weren't able to do their day-to-day stuff and businesses were shut down, etc., etc. But I think we're going to see a recovery in the demand for energy, and I think that will continue to increase. There's also a lot of discussions with the OPEC Oil Council, who work together quite closely to make sure that production is cut and make sure that we don't go to oversupply issues. And I think a second factor why I expect us to see a commodity super cycle as well is, and we'll probably touch on this in a minute, but is to do with the inflation and to do with the weakness of the dollar and the weakness in the purchasing power of the dollar, which I expect to kind of erode over time. I think this will ensure that kind of commodities, oil and other commodities will go up. As you touched upon as well, Amar, in terms of precious metals, a lot of these are active in industrial uses. So silver, for example, is used in lots of industrial uses around the world. And also, you know, things like nickel, as you said, copper, etc., are used in EV cars. So as we see that demand for those types of technologies increasing, we are going to, I expect us to see a higher price in those commodities and stocks related to those commodities, but also a great hedge in someone's portfolio as well. Yeah, but I also expect to see a lot of alternate energy companies start to do well. I think in the Biden administration in the US, they're pretty pro alternative energies, a little bit more compared with Trump. So I expect that to kind of be rolled out and it to become more normal. I think especially as the younger generations kind of grow up and have this kind of green energy in mind, I think as they mature into adulthood, I think some of, I think more and more stuff will shift to alternative energy. So yeah, those are my thoughts. Anyone else have any more points on that before we move into another subject?
Yeah, I'm also not an expert in commodities. But I can, I'm sharing your ideas that in the future we are gonna see more green energies, and I think also, since we talk about COVID, that teach us to not mess up with the environment. Hopefully people learn that, and yeah, I'm not 100% sure about that, but hopefully this is gonna remain, and we are gonna see more into more of a transitions into this new type of energies.
Yeah, I agree. I think there's a lot more green initiatives. I think Greta Thunberg, the lady from the young lady from Scandinavia, has raised a lot of media interest on this. So expect that to become more into people's mind. Does anyone have any points that we want to talk about in terms of expectations on inflation? Zach, do you want to anything on inflation or your expectations on what governments are going to do, or just kind of macro themes?
My views on inflation are okay. So I generally divide all ideas into three sections: yes, no, and too hard. Inflation is too hard for me, man. I have no clue. I mean, I get that people are saying money printing, and I understand that logic. But at the same time, if you look at historicals, you look at Japan. Japan has been printing for a while, and have they seen inflation? I would argue no, they have not. I mean, they've seen a little bit. They've seen little spikes here and there, but over the long trend, I don't see that happening. So
they did have a lost decade though.
Yeah, exactly.
Which a lot of that was to do with kind of quantitative easing.
Yeah, exactly. So I fall there under the too hard. I think you can add more to that. You've been to Japan, and have you stayed there, Stephen?
No, I've never lived in Japan. I lived in China,
right.
but never lived in Japan. I visited there most of Asia. But yeah, I think in terms of inflation, I guess there's different ways to look at it, and I think each government's different. I think Jerome Powell, the head of the Fed, Janet Yellen, and all of those people, I think they've been pretty quick to try and calm people's worries of inflation. But if we look at actually as an overall subject, that in the US last year, they actually printed 18% of the monetary supply. So the total amount of money that's in the economy was printed last year in 2020. So that's actually pretty significant. And I'm not saying that there's going to be hyperinflation, but I do think that inflation will exceed the expectations of 2% per year, which they think is okay. But I think you've also got to take into consideration that the mindset in terms of measuring inflation is done excluding energy and excluding food, which are obviously massive parts of the economy, and is what the average people will actually feel in their pockets, right?
Yeah.
And especially with disruptions of supply chains of goods and services, etc. So to cut a long story short, I think that inflation will probably go higher than they're expecting over the 2% in real terms. over the next kind of year or two. But I don't expect us to see kind of hyperinflation. And there are some things that they can do in terms of compliance and making sure that, you know, they could always increase interest rates slightly to try and quell inflation, which has worked in some other parts of the world. So yeah, I expect.
Actually, now that you mentioned that, I kind of agree with that. There is this growing sense. I don't know if you guys agree with me, but there's this growing sense of nationalism. So everybody just wants to make sure, you know, all the goods are produced in whichever country. If in the US, it's produced in the US. If in Singapore, it's produced wherever. So that increasing sense of nationalism, and that could be one of those factors that, you know, are not accounted for when we talk about inflation. Because now your TV is more expensive. You're not importing from China. You have tariffs now, right? So what happens to your TV? It goes up by 15%. So is that going to be an inflationary factor? It could be, you know.
Yeah. I think you're right. I think the common mistake that people make is just to say across the board inflation is 2%.
Yeah.
But every industry has different inflation rates. So you know, if we look at medical inflation for you know, procedures and seeing a doctor, etc., that definitely rises more than the average 2% per year.
Absolutely, yeah.
You know, commodity prices, food costs, you know, they all vary to a different degree. And I think just one other thing I wanted to say on inflation as well is, I think governments have got to exercise some caution. They don't want to raise interest rates too high because it could effectively cause a recession if they paid it too high, because people are less likely to spend, etc. But they need to be careful not just to continue increasing the stimulus as time goes on, giving away free money to everybody. Mm-hmm. Because if they do that, you get into a situation like Turkey. I'm not sure if you guys know a little bit what's happening in Turkey right now. But the leader of the president of Turkey at the moment, he just believes that you don't increase interest rates, and the way to stop inflation is by having low to zero interest rates. Hasn't worked out very well for him and the country over the last few years, but yeah, it just shows that you've got to have a balance between people continuing to spend money in the economy and making investments easy for them, money easy for them to get, but also not you know, being fiscally responsible.
Yeah, absolutely.
Simone, do you have anything to say on, or anything you want to talk about?
Okay. Yeah, so again, this is not my expertise, but a couple of things. So one is there could be inflation. I think the last prediction I saw was around 2.4% for this year, I think. And then it's gonna slow down to around 2%, which is not that bad, but at least for US. Then other countries could be different. But one thing that I've seen happening is that investors are overreacting to inflation news. So like suddenly stock prices like ARK Invest, the ETF drops 40% or 30% because of inflation news. That's probably a little bit of an overreaction. It's important to weigh properly each of these factors. So obviously inflation, interest rates will contribute in certain percentage to the stock price, but it's not going to be all about that. So when I see a 30% sell-off because inflation's went up, that's for me, it's a good moment to buy.
Yeah, I think you're right there. Do you see, Simone, do you see any areas in terms of inflation in your area of specialty? So in medical or in, you know, pharmaceuticals, this kind of area?
So, yeah, so that one, demand and supply in the, at least for the industry where I've been invested in, which are tech and healthcare, have been affected a lot during pandemic, actually on the opposite sides. So we have seen, for instance, tech stocks that had a huge demand. So now there is a shortage of chips because everybody bought all the chips that were available. There are no more chips left.
Save
So
chips for the rest of us. Yeah.
And on the other hand, on healthcare, there was like many oncology treatments that had their revenue decreased because people stopped going to their healthcare screening because of COVID. So in that case, demands went down. For now it's gonna change because it's not that if you don't do the screening, you don't have cancer.
Yeah, that makes a lot of sense.
You're gonna find it later, and it could be much worse. But it's gonna come back demand, and that one will impact the sector inflation, let's say. So yeah.
Yeah, so that's a great point. I mean, yeah, so people have not been going to the doctor. Now that it's opening up, they're gonna go back and have all their checks. Yeah, give us the ticker symbol, man. Let's look into it.
That's the worrying part of.
That's the worrying part. Okay.
Yeah.
Okay. Cool.
Yeah.
Amar, do you have any points on either inflation or interest rate? I thought actually it'd be quite good while we've got, as we're all in Singapore. Does anyone have any views on particular in terms of Asia on any of these points?
Well, so far the loaf of bread I buy still costs the same. I haven't really experienced inflation in terms of food costs. The meal I have at the nearby coffee shop still costs about the same. So thankfully the prices haven't gone up that much here. But I think I'll just say that I agree with Zach here. I think this is one of those questions that's a bit too hard to answer, whether there be inflation or not. If you listen to Cathy Wood, for example, from ARK Invest, she believes that disruptive technology is going to create a deflationary force. Basically, it's going to lower prices because technology is going to improve efficiency and bring down costs of a lot of other products and services. So that's going to create a deflationary force. But then, of course, you have a lot of money printing going on. And there's only so much money printing you can do and before you really start to get inflation that is out of control. But like I said earlier, I'm not really a macro investor. So what I tend to focus on is things that are within my control. And those are the companies I own in my portfolio, for example. So I believe actually that owning stocks is one of the best hedges against inflation. Basically, if you look over the last 100 years, if you look at the S&P 500 performance over the last 100 years, it's averaged about 8 to 10%, I believe. And during that last 100 years, you've had a lot of major events. You had wars, you had a Great Depression, you had financial crisis, and you had a lot of inflation also during those periods. But I think if you own stocks, and especially if you own high quality stocks, I think you have had a good hedge against inflation. Because, I mean, if prices do rise, stock prices will also rise. And we've seen that a little in some countries like Zimbabwe, where there's been absolutely crazy inflation. The stock market has also gone crazy. But of course, we don't want that kind of price appreciation in our stocks. We want them to go up reasonably and in a sane way, basically. So, but for me, like I said, I focus on things I can control. I think inflation is not something I can really control or really foresee very well or predict. So I believe holding good quality stocks is the best way to hedge against inflation.
Yeah, that's really interesting, Amar. And actually, I'm just going to touch upon a couple of the areas that you said, which I think were actually really poignant. So one of them was that technology is deflationary. And you are actually right. You're really right in that point because, as you know, like, for example, many years ago, televisions were much more expensive than they are today, right? So I think over time you become kind of more efficient with technology, and kind of the inflation in terms of technology does actually reduce over time. So I think that's actually a really important point. And I think we'll see some, for example, we'll see some efficiencies as well. So, you know, it could be a while off, but if we look at stuff like self-driving cars, for example, which none of us know when it's actually going to happen, but I think most of us could agree that it will happen at some stage. Again, I think that will be deflationary because you won't have to pay for all the transportation costs for kind of long distance haulage. There probably won't be taxi drivers anymore, and there'll be a lot of efficiencies that you can make, which will be because of technology. So yeah, I can see some of those areas.
Yeah. So what you're saying, it's basically transitioning from one technology to another, so that will have an impact on inflation. Yeah,
I guess in terms of technology inflation, because I mean, things should go, you know, with technology, things should go down in price, but you also get a lot of efficiencies that save you money. But then again, you also have the counter argument and the counter issue where technology starts to eat into employment, because you don't have that taxi driver anymore. You don't have that guy driving the truck, delivering goods from from your storage to the supermarket. So yeah, it's kind of ebbs and flows in the economy, right? Another subject I thought we would talk about and see if anyone has any views is about kind of the rise in kind of retail investors in the stock market, because I think 2020 we saw a big boom, and I think a lot of us would have seen that on Etoro, right, where a lot more registered users are coming to the platform. Why do you think that there's been such a big boom in normal investors coming into the market where they previously hadn't been? Anyone have any views on that?
I have so many views on that, but we're going to get into this later. Shall I get into it now?
Yeah, I have a few ones, but probably I will miss many. I mean, if I'm going to think about this later, I will probably think about 20 more reasons. There are so many reasons of why of this sudden increase, I think, yeah.
But do you think some of that, like, whilst we're on that subject of inflation, do you think some of that is because people are worried that the money that they have in the bank from their salary or what they've saved over time is going to get eroded because of inflation, and the purchasing power of the dollar or whatever they're using is going to reduce? Do you think some of that has an effect on people using things like stock? I mean, in the past, people would use gold for a store of value. Are people using stocks as a store of value now in these times?
I don't think so. I think it's human beings being human beings. We want to optimize our resources, so they would pump their money into stocks. I believe it's become easier as well. In Singapore, we have Tiger Brokers. It's so easy to open a trading account. Amir has an options account, right? I think he was talking about it just now. Options accounts are not easy to open like 10 years ago. Now it's just so easy. Etoro is easy to open. I mean, when you guys open your account, I did 5 years ago. So easy.
Yeah.
So I think that has really brought a lot of people in the market. In US, Robinhood is huge, and that has really brought a lot of traders, which is great. And yeah, I've got so many thoughts on that, but I'll go into that later. Yeah, Simone, go ahead. Sorry.
YouTube effect as well. So it's easy to open an account, but with so many YouTubers talking about investing in stock markets and showing off on their YouTube channels how much money they managed to do over the past year, how to get money so quickly, it's obviously attracting a lot of people. I think so overall also the awareness of investing and financial education, it's increasing.
Yeah.
So more people start to understand that everybody should invest in the stock market, at least a little bit of their total wealth.
Yeah.
And I still believe that a bit of that it's basically what you said, Stephen. So yeah, so I think we are gonna see more and more users coming in, and maybe also the volatility of the markets could have played a role, because you could say like Tesla, everybody knows that Tesla went up, I don't know, 50 times from what it was a couple of years ago. So everybody is joining Etoro, Robinhood, or something like this, trying to make money quickly. Or GameStop.
Oh yeah, GameStop. I was about to mention
trying
that.
to find yeah.
I think you're right there, Simone, because I think there's a couple of factors at play. I think one is obviously the more momentum the stock market got in 2020, the more it attracts people to invest. You get the whole FOMO. My friends are making money. My cousin, my dog is making money. So you get this kind of more and more interest as the kind of market goes up. I also think that people were bored in 2020 because many people, either jobs were affected, some people lost their jobs, and those that didn't lose their jobs, a lot of them were working from home. They had a bit of extra time, less commuting, etc. And so kind of took up investing as a hobby, I think, which I think it's overall a good thing. I think as long as we can get people to keep their interest in investing, even when the market doesn't. I mean, market can have good years. 2020, I think people will understand, was exceptional. The Nasdaq was much higher than its usual average. Same with the S&P. But I think if a lot of those people can keep their interest in investing, I think it's generally good for people, because I don't think that investing is taught well enough in schools and in colleges and universities. I think people focus on mathematical formulas and all this sort of stuff in finance, algebra, trigonometry, whatever people study, and less about the day-to-day stuff that people actually need. And I think investing is extremely important, because I don't think it's something that people can kind of opt in or opt out at the moment, because I think you need to have some understanding of investing, because you need to just keep up with inflation over the years. So you don't need to be an expert in investing, but I think it's important to at least have an understanding of investing, so you can, keep the money, at least keep or continue to grow the money that you have in your savings.
Right. Just to add on this part about education, it's important that people are not going to jump with all their money into investments. So they just should get their hands dirty a little bit and understand the volatility, how much they can make or lose in a single day, and then get confidence and then grow over time. So probably that's the risk of many of the new retail investors that join in 2020. So they have seen basically the market's only going up so far, and it's gonna be bad when there will be a huge correction. Yeah. It's gonna scare a lot of people. And another factor, I believe it played a role, at least for some stocks, is the capacity of some CEO or other people in the stock markets area.
Yeah.
Like I can name Elon Musk or Cathie Wood to inspire people into joining their journey, basically. It's not only about investing, it's about like a lot of people are investing in Tesla because they believe in Elon Musk. And
True.
And they want to go to Mars, even if that has nothing to do with Tesla, but they just want to be part of their of his vision. And same for Caddy Wood.
I agree with you there. Actually, I think people these days, and I've seen this kind of trend, that people are more inclined to believe in individuals rather than rather than companies. And I think this is kind of a growing trend. And you see that with Elon Musk. I think Elon Musk could invent any company, and he would have a big army of supporters, regardless of the the business use cases or PE ratios and all of those things. So I think you see, and I guess the same with a lot of these, with a lot of conglomerates as well. I mean, a lot of people invest in Warren Buffett companies because they trust in Warren Buffett. So yeah, I think there's a little bit of a trend there where, and I think that kind of actually is a lot of what's happening on the Etoro platform, because especially with us as popular investors, we're not companies. So I think a lot of our success or our downfalls is a lot of it's based on, do people trust you as an investor as well?
Yeah.
No, I want to add to that. I also agree. I think it happens like all throughout. I think it's because of the age we live in, this like social media age. Like I think, Simone, you're from Italy, right? I think the last election you guys had, Le Pen was surprising, yeah? She came into the last final two, right?
Le Pen?
Yeah, is it Le Pen? I can't remember her name.
I think they are confusing.
No, sorry, the lady, I can't remember her name right now.
That was France, I think, right?
No, not France. I'm talking about Italy. The last election, there was the underdog that went into the final two. I just can't remember her name. I'll get it later.
Yeah.
But yeah, I just think it's just very populist. Like even Donald Trump, he's just a populist. And if we look back in history, there's a great book called The Third Wave that talked about this. They said that every wave there's always like rotations, right? I mean, we keep talking about rotations, but this is just a generational thing where there will be like these strongmen that come about and they become the populists of the era. So yeah, seeing a lot of that. I think you're absolutely right. Elon Musk is a major one, man. It's amazing what he's done. It's really amazing what he's done. Yeah.
Yeah. I think people are just investing in Elon Musk because he is so intelligent, and he thinks 10 chess moves. He's playing 4D chess with the world. So I think people believe that he can make a difference in the world, so they want to be involved in the companies that he's invested in. Yeah. Amar, do you have any anything that you want to talk about on that subject in terms of individuals or to do with investing, or alternatively also any tips for not investment advice, tips for new investors or retail investors that are looking to get into the market right now?
So I mean, I agree with what you said. I think overall it's a net positive that more retail investors are getting into the stock market. I think stocks are the best wealth creation instrument days in the world, basically. It's the most reliable, the most predictable way to create wealth. Just look at Warren Buffett. But I also agree that I think, we need to be a little careful about what we see in tweets or what we read about in the papers or something like that, and not just make rash investment decisions. And especially this meme culture that we have nowadays where, a band of investors will just try to drive up a price of a stock that is not very good, like GameStop, for example, where the business is failing, but people are just basically gambling with GameStop. I think something like that is quite dangerous. And I think the best example of this is actually not GameStop, but Dogecoin, the Elon Musk cryptocurrency, which was created as a joke, but now I believe it has a valuation of about $8 or $9 billion. So that is quite astounding. I think that something created a joke to just rise to $8 or $9 billion just because of what Elon Musk tweets. I think that is something that's quite dangerous. It gives us a lot of pause, and I think we should tread very carefully, especially with these meme stocks and cryptocurrencies.
Yeah, I think that's a good point. I think people do have to tread very carefully, because obviously they're not trading on any type of fundamentals, which can be dangerous. But I don't know. I always think, I don't know what everyone else thinks on this, but my personal opinion is you're not investing in these types of stocks because you think that the business is going to increase and that the revenues are going to increase, etc. To me, it's an ideological war between what the average Joe, the normal person on the street, who wants to kind of get into investing, and those obviously in hedge funds, banks, institutions, who people feel like they've been making a lot of money throughout the years, and not always acting in the best interests of retail investors. So I kind of consider it a bit of a ideological war, and the issue is with every war, whether it's ideological or a real war, there's always going to be a loser, and there's always going to be bloodshed. So that is where I think people need to be careful moving forward. Anyone want to chip in on any of these kind of meme stocks or these ideological wars?
Oh, Simone, I found the name, Susanna Saccardi, is that right?
Repeat, sorry?
Suzanne Saccardi, is that right? Susanna Saccardi? I can't pronounce the name, yeah.
I'm not sure, but I have to say I haven't been in Italy for a while, so I might have missed her.
Okay.
Yeah.
Simone, you're going to lose your Italian passport now, I'm sorry.
Right.
You have to get a Singaporean one now.
Yeah.
Not that easy.
Yeah. Shall we take a quick break, then we'll come back with the next section? Is that right?
Yeah, sure. I think that kind of wraps up the main themes.